thank you very much for speaking to ET Now. We appreciate you taking time out on this snowing winter morning here in Davos. I specifically want to speak to you about oil. Nobody, of course, knows which levels is oil plunging to, but corporates like yourselves and others in this field are beginning to cut down on investments. I first want to understand, what is your assessment of the oil situation? How much more time till the pain begins to subside?
Well, I think it's going to take some time. I think we could see a low point in the first quarter, the second quarter. Of course, Iran is coming on production now. Things are starting to fall a little bit in the U.S. But I think we're in an oversupply position for the first half of this year, certainly. And then we'll see. I think some of the fundamentals will start to tighten up in the third and fourth quarter this year. But there could be more pain to come, absolutely.
So do you expect oil prices to rise by the third or the fourth quarter? And do you actually see production cuts happen? Russia spoke about it, but then, of course, kept mum.
No, I don't see production cuts happening. I think projects are being deferred and activity is dropping. And so I don't see the cuts coming, but what I do see is demand rising around the world. So there's demand starting to come up, and at some point they'll hit a supply-demand balance later in the year, and then you have to work off lots of stocks.
How much will you blame the China slowdown for the crash in oil prices? I know it's not the biggest consumer of oil, but it has led to a commodity crash of sorts.
It's a sentiment, most certainly. I mean, the data is just coming out, and China, of course, has been growing for many years, 10%, and it's 6.9%. So that obviously affects commodities and resource commodities in particular. But it's not the whole story.
It's not just BP, but other companies, Shell and Exxon, everybody is talking about investment cuts. So will you help us understand scaling down of investments, slashing of jobs, holding back on projects? Till how many quarters is this likely to happen? And when do we see fresh investment in the oil sector? Or is that some time away from now?
Well, it's a natural response to what's happening with prices. Naturally, this is a commodity cycle. We've seen it. I've seen it 4 times in my career. Projects that you have underway, you won't stop those, but some of the ones that are today are just more economic to sit back and re-engineer and retool and put them back a number of years. So there will likely be a gap out there in the future where the investment is not keeping up. New projects won't keep up with rising demand, and we think demand will continue to rise for the next 20-25 years. Sure.
One specific question on India, and I know you're very heavily invested in the KG-D6 gas. Of course, natural gas prices have also plunged. You are in some sort of an arbitration with the government of India. I don't want to get into the specifics of this, but I specifically want to ask you, are we going to see BP and Reliance make any more fresh investments in KG-D6 up until gas prices are revised? And don't you believe that this is a blessing in disguise? At 4.3, you're still better off than the gas prices that have plunged?
Well, I think it's a great opportunity. I was just in Delhi in the first part of the week of January. In fact, the Prime Minister brought together energy experts from around the world to talk about the merits or not merits of market pricing for gas. And I think market pricing for gas, natural gas, is really important for India. It's going to need all the energy it can get over the next 20 years foreseeable future. Natural gas is a clean burning fuel. It's good for climate change. And if there's a market mechanism there that companies can use and make decisions on, there's definitely more investments we would make.
So one last question before I let you go, and that has to do with the demand in EMs versus the demand in the developed world. When do you see the EMs begin to contribute to the oil price rise? I know they're lesser consumers than the Europe and the US of the world.
Well, I think Europe and the OECD and North America, for example, demand is not going to rise, but it's rising in India today. It's rising in China. There's still growth numbers. In fact, most of the growth in the world is coming from India and China, Indonesia, places in Asia.
You've taken substantial write-downs on your India investment. Is that an investment on hindsight you regret?
No, they haven't been substantial write-downs. We have taken some big numbers. We've had to because of accounting rules. So no, I'm a long-term believer. I've got a lot of faith in India. I've got a lot of faith actually in the Prime Minister and his government to get the engine going in this area.
Thank you very much, Mr. Dudley, for speaking to us. Appreciate it.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.